Hello, everybody. My name is Steve Philp, and I'm the Partnership Director here at Portugal Pathways, and I'll be hosting today's webinar session. We have a great panel joining us today to talk about some of the most exciting investment opportunities in Portugal across some of the key sectors that are driving the country's economy. Now, Portugal continues to outperform the Eurozone, the UK, and even North America in a number of economic areas, with booming interest from international investors. Many of these investors are focusing on key sectors, including renewable energy, healthcare, technology, luxury hospitality, tourism, media, and international events. Plus, Portugal's high-end real estate market continues to see a far higher demand than supply. Portugal's experienced continued capital growth in its luxury property markets, high demand in areas such as Lisbon, Cascais, Comporta, and the Algarve in the south, and particularly the central Algarve region and nearby Golden Triangle locations, are seeing property values approach levels similar to Monaco, London, and New York. This upward trend is also expanding to other emerging regions north of the country, like the Silver Coast, Porto, and Braga. Portugal has also developed its Golden Visa residency by investment program through a series of 30 plus alternative investment funds that invest in Portugal's growing sectors, with over 7 billion having already been invested. Before we bring our panelists in to discuss all of this, I'd like to remind the audience to please obviously leave your questions in the chat and your comments. We'll try to answer as many of those as possible during our Q&A, and also our panelists will try and get to some of those questions during the webinar. If we don't manage to get to all of them, our team will get back to you with answers and arrange, obviously, any discovery calls where necessary after the webinar itself. And just to remind everyone that the webinar itself is being recorded. So if for any reason you're unable to stay for the duration, we hope for about an hour and 10 minutes, then a recording of today's webinar will be sent out to you within the next sort of 24 hours or so. So let me introduce to you your panelists. Firstly, we have Paul Stannard. Paul is the chairman and founder of Portugal Pathways and the Portugal Investment Owners Club. He leads initiatives connecting affluent expats and global investors with strategic residency, investment, and wealth structuring opportunities. Joining Paul, we have Joana Branquinho. She is the CEO and founder of Aurea Real Estate Advisors, a leading expert in luxury real estate and hospitality, guiding private clients and high net worth individuals on their real estate investing strategy in Portugal. Joining Paul and Joanna, we have Paul Sheedy. Paul is the special advisor to the Portugal Futures Fund, an alternative investment fund approved for Portugal's Golden Visa residency by investment program. And finally, making up your panelists today, we have Nuno Santos. So Nuno is the tax partner at CMS Law, specializing in tax structuring for domestic and international investors across sectors including energy, tech, finance, and real estate. Welcome to our panelists today, and thank you for joining us. So let's sort of set the scene a little bit, and I'm going to ask Paul Stannard to do this. And Paul, can you sort of talk us through why Portugal continues to be a beacon for international investment right now, and how it is performing compared to other Western nations? Now, I've got a little slide for you to talk to, Paul, so give me 2 seconds and I'll just load that one up for you. Here we go. Over to you, Paul.
Yeah, sure. So, we've got these data points on screen, but before I sort of talk to those, some things have been happening in the international investment markets. I don't know if anybody's noticed that the world sort of turned upside down a bit in recent months, and Portugal seems to be sailing on through, and these stats sort of came out before that happened, and it's actually only accelerating what's going on because, you know, more people are wanting to diversify investments, you know, not just in dollars. They want to have less exposure now, and you're seeing more money wanting to come into euro investments. And Portugal was already outperforming the market. Its GDP is growing faster than the Eurozone. So Germany, France, outside of that, the UK, and you know that is actually growing faster, and some of the others have been going backwards in recent weeks, as you've seen. Inflation has also been decreasing at a time when other international nations, including North America, most of Europe, inflation is creeping back up again. And investment attractiveness in Portugal has never been higher against some of those big countries. 77% of investors and entrepreneurs expect Portugal's attractive to continue to improve over the next 3 years. And Ernst & Young's recent international report had investor confidence in Portugal at an all-time high of 84%. And a lot of what's driving this are some key sectors that are all linked to what's been sort of happening, some of which are linked to the Golden Visa program and some of the sectors where Portugal's punching above its weight. And I'm sure we'll talk a little bit more around that. But yeah, that's the headlines.
Thank you, Paul. Thank you. I mean, just moving on a little bit. I mean, as of last year, countries like obviously the UK, China, India, the US, Canada, Northern Europe, South Africa, Brazil, and South Korea, to name but a few, have seen a significant wealth migration to Portugal. Now, I'll put this one to you, Joanna. From a luxury property perspective, what have you guys seen on the ground in Portugal in 2025? And after you've given us your sort of thoughts and perspective on that, I'm going to ask the other panelists sort of to come in on that as well.
Thank you so much, and thank you for the invitation. It's a pleasure to be here sharing some thoughts and experience on the market. So actually on the luxury market and the more ultra luxury market, we have seen that 2025 it has been pretty remarkable. It started also in the end of last year, and it shows that typically the high-end properties have continuously rising interest because there are very few opportunities available. There's not much stock available, and no one is building more land. So actually, this is one of the reasons why it's so attractive here, not only because of all those reasons like the quality of healthcare, security, stability, like cost of living, and all the interesting parts of being here. And for working mainly with international clients, people like to be here and integrate very easily, also because of the language and the lifestyle in general. But actually, we are seeing prices mainly in our Riviera, Cascais, Estoril, all the shoreline close to Lisbon, is the area where we see the biggest growth in the luxury market. In the last 3 years, I would say the last 2.5, 3 years, the rise has been more than 10% a year. Okay, and we have some properties in the most interesting locations like Quinta da Marinha and other neighborhoods in Estoril and Cascais to go over 10 to 25,000 per square meter. So, like you said, we are up to Monaco and other locations that are really premium worldwide. And we see the continuous rise of interest. And also in other locations like Comporta, we are seeing it quite slow down a little bit in the last years, but over these last months and let's say almost a year, it has been already gaining interest due to very ultra luxury projects going on there. All of them are off market yet, but it's already gaining a lot of lights into it, into the location. And then obviously Quinta do Lago, the Golden Triangle in south, it's also something that is always very desirable for different audiences, I would say. So yeah, I would say that the real estate market is really interesting at the moment. We see completely an increase into this range of more luxury. But then also, very interestingly, we see other locations like the Silver Coast, the north, like Porto, for instance. It's growing really a lot. We are getting a lot of investors to our office in Porto because the offer in terms of quality real estate and luxury real estate is very, very good. There are many projects ongoing currently and very attractive yields and appreciation. So yeah, I think it's actually pretty exciting, and the fact that the Golden Visa is on, new tax benefits are on, it's bringing also light to other people looking at Portugal again to diversify. And as Paul was saying, the fact that some people are afraid of the current situation, especially like in US, and they want to diversify dollars into euros. And we are getting more clients in these last months that want to really diversify and take advantage of the reliable market and opportunities and diversify their risk. Okay.
No, thank you, Jan. Nuno, what about your thoughts with regards to this of the significant migration that we're now seeing?
No, Steve, I fully agree with Joanna. We have been facing the same or seeing the same situation. I think that a huge interest from the US, which is growing very rapidly and very significantly ever since we had the elections in the US. So not only people that are willing, as Joanna was saying, to diversify their investments, but really people willing to move to Portugal or to relocate to Portugal. And so we typically used to see investors from the US, namely in the Golden Visa spectrum, interested in having Portugal as a kind of a plan B, but it's becoming more and more the plan A because they don't feel happy or safe in the US anymore, or they don't agree with the US policy, and therefore they are willing to relocate to Portugal. From the UK as well, again, from ever since we had the elections and the Labour Party won the elections, a lot of people willing to relocate from the UK to Portugal as well. And obviously, as Juana was saying, that has a huge impact on the real estate sector. And so the demand increases and the offer is not following. And that obviously has an impact on the prices as well. And I also have been watching a bigger diversification as well in the place where people are relocating to, because in the past, 90% of them would come to Lisbon or the surroundings of Lisbon. And now you see much more people in the Silver Coast, a lot, because they are not that distant from Lisbon or from the Lisbon airport. And also to Porto, which already happened a bit, but it's becoming more and more common. So I fully agree with Joanna's view on the current situation.
Paul and Paul, do you want to sort of jump in with any thoughts at this stage with regards to what you guys are seeing?
I'm happy to talk about investments and stuff. We're seeing the same thing as for what Nuno and Joanne said. There's loads of reasons why people are looking at Portugal. One of the big positives from an investment perspective is that it's got some fabulous sectors to invest in that are showing great promise, and we believe have plenty of headroom, plenty of growth opportunities. So a fund like the Portugal Future Fund, which is an alternative investment fund, is a closed fund, so it's almost specific. It's not exclusive because there's no such thing as a Golden Visa investment fund. It's funds that are qualified for Golden Visa investment, but the fund that I'm advising is set up as a closed fund, so it spans 7 years, so it gets people in over that magic 5-year period to get their Golden Visa application qualified. And I guess we'll talk a little bit more about that. But just from an investment perspective, There's healthcare, media, tourism, tech. There's fabulous opportunities in Portugal, and what we see is, which is really exciting, is not only are there great companies in Portugal, but the companies can attract great talent to Portugal to help build the companies, and that's for what Nuno and Joanne has said and Paul has mentioned. It's a really nice place to go and live. It's a really nice place to go and work. So where you'd have challenges in other parts of the world, in other markets, the investment community or see it very positively that the talent is coming to Portugal. Now, in the golden visa requirement, 60% has to be invested in Portugal, so that's good. So that's kind of the main point that we're seeing in the Portuguese setting, is that there's lots of opportunities, there's lots of headroom for growth in those opportunities, and there's lots of talent on the way to support that.
Thank you.
So obviously, Steve, I'd add to that. Having been on a lot of meetings recently with investors, the profile it's changed in terms of how they look at Portugal as an investment place. They now see it as a safe place. 2007, that wouldn't have been the case. It's very different. And the reality, I've been on with many different investors with, their wealth managers from the US, from the UK, and a lot of them now saying, public markets are risky because the narrative is changing on a daily basis. So public markets, if somebody sneezes on one of the major stock markets, Portugal gets a big cold on the public markets, whereas the private sector in some of those key sectors that Paul Sheedy was talking about, are delivering long-term sustainable investment opportunities. And if you can invest in a blended approach across a number of those sectors, you can create diversification as well in markets where, Portugal really is punching above its weight.
Actually, thank you, Paul. So obviously we can't really talk about investment in Portugal and not touch on the golden visa residency by investment program. It's been mentioned several times already during this webinar, because obviously it's hugely beneficial to the overall Portuguese economy. Now, many investors are drawn by the golden visa with the flexibility to give the family a passport and dual citizenship after 5 years while investing in Portugal's key private equity sectors, obviously through these regulated alternative investment funds in Portugal, which Paul Sheedy was alluding to. Having the freedom of movement and assessing the 29 EU Schengen countries with only having to be in Portugal for 7 days per year, and having the flexibility of where you pay tax is also a big draw for some investors and their families. Now Paul Sheedy, as someone who is involved in this space, how is the golden visa residency by investment shaping up so far this year? And have you seen any specific investment trends at all?
Yeah, I think what Nuno and Joanna and Paul have mentioned is there's just an awful lot of activity. The inquiries are just through the roof, and the urgency by which people are talking about moving money and getting things started is significantly changed. So I think we're seeing more people more eager to act quicker. That's the kind of trend we're seeing in it. The good news for all those people who are trying to move quickly is there's plenty of opportunity there in the investment stuff. But the investment themes in Portugal are not really changing. The sectors that I mentioned earlier, the tech, the hospitality, the media, those ones we've been watching those and been investing in those for a while, and we think that the investment themes and thesis is pretty consistent, but the investment inquiries and the amount of money coming into it is massively increasing. Now, the golden visa, while it's fantastic as you've just described, is one piece of it, but for most people coming into it, the golden visa won't be the major part of their personal wealth. So what's also very important for people who are looking in this direction is to engage with people like Nuno and get a proper tax lawyer, get a proper independent support away from the fund side, because we're a fund. So we're a tool within the kit, but you have to get to decide what kit you want first. So you should really start that process. Investors should really start with what their overall goals are, and then talk to people like Nuno about their tax position and how that may or may not be affected, or what their options are within that environment. And then when you get through that, and you've got something that works for you, then you come down into the fund community, which I'm part of, and then pick a fund that is the right one for you for your tax planning. So get your kind of motives and desires straight first, and then you come into our industry as to where you want to place those investments.
Thank you, Paul. Obviously, you've alluded to it a couple of times, Paul. I think Paul Stannard did as well. But I want to talk about really the top performing sectors and what they look like in Portugal right now. And I know, Paul, that you're going to talk to this. And again, we've got a couple of slides really just to illustrate and hammer home those points. So give me 2 seconds and I'll load that and you can talk to that. Can you see that? Here we go. You're on mute, Paul. Paul, you're on mute.
Apologies, I was having a conversation with myself there. So Portugal's economy, like every country, has its highs and its lows, but there are 5 or 6 sectors that are really driving this GDP growth, and healthcare is one of them. Portugal now is was voted 3rd in the world for health infrastructure. So its golden visa program and its tax incentives like the old NHR tax regime and the new IFI-CI tax regime are bringing a lot of wealth and a lot of talent to the country. But as part of the visa programs, you have to have health insurance if you're coming to the country, and a strong public healthcare system with a strong private healthcare system merging together has created, this situation where, healthcare and healthcare innovation is really thriving in Portugal. And because it has, this strong infrastructure, 3rd in the world for medical infrastructure, there's been some really big successes in healthcare. There were just a few years ago, there was a healthcare fund that then has evolved into a biotech specific fund that has seen 7x and even 100x exit. Now, I'm not saying past performance is a prerequisite of future performance, but the healthcare system is definitely driving that sector very strongly. Sorry, Steve, you switched all the slides on. If we could go back to the slide.
I do apologise. I think it's just reloaded itself. Sorry.
So 8% growth each year forecast till 2028. Institutions are investing. The European Union's European Investment Fund has just become the lead investor to that biotech fund, and a number of family offices and banks have actually followed in behind that. So, investors, whether they're sophisticated investors or retail investors, they're piggybacking on, international banks investing in Portugal's healthcare technology infrastructure, a lot of health tourism, a lot of private health, where you can have your own concierge service, where you get a private doctor with much shorter waiting times and a much more point of care. So healthcare, really strong area, and a sector I think is going to continue to grow over the next 5 to 7 years in Portugal. Media and international events. Lisbon now is the third most popular place in the world to hold international events and media. Obviously, you probably heard the news about the FIFA World Cup coming to Portugal. It also has the biggest tech summit in Europe held in Portugal, the Web Summit. And later this year, the Global IFA Conference, which is a conference for wealth and cross-border tax. And some of the major families and major wealth advisors for all of the big five will be coming to Portugal. 2,500 delegates representing some of the largest wealth in the world, talking about that side of it. And a lot of media entrepreneurs that are coming to Portugal, bringing technology and that side of thing. And again, strong annual growth projections, and with these other big projects like the FIFA World Cup, that's only going to accentuate Portugal's already strong sporting connections. And I don't think you can underplay a nation like Portugal getting, the next time. It hasn't been in Europe for a very long time, and to bring it to a nation or nations like Portugal, who are true football nations, I think you're going to see significant benefits on GDP in those sectors, but also that's going to spread out into tourism and hospitality and many other sectors beyond that. Steve, the next one. And obviously technology with a huge amount of talent. There was an article in the Financial Times about brain drain coming from the UK, from the US, and from other parts of the world. And Portugal, is offering, strong incentives to value creators through its new ICI tax regime. And I'm sure Nuno will be out and talk a bit more about that later. And finally, hospitality and tourism. The demand for, higher end luxury tourism is also driving a lot of growth. 8.7% year-on-year increase, 10,000 new hotel rooms expected by 2029. But the level and standard is where it's really driving it up. And I know we haven't got the slide, and after yesterday's outage, people may wonder. But in reality, I think that was more a Spanish problem. But Portugal has 71% of its electricity is from renewables. And that is an area that is, they really led the way on, where the rest of Europe is really at 50%. So, there's some of the key sectors that are driving this, economy.
Thank you, Paul. Thank you. I can see from the chat we're getting lots of questions come in, and I can see obviously some of our panelists are engaging with you live as we speak. If you've got anything specific or anything relating to your own personal situations, again, please obviously reach out to us at Portugal Pathways. One of the team will put a link up for you to contact us. And we can either have a sort of a no obligation discovery call just to assess your situation and understand your needs and goals, or we can obviously introduce you to one of the panelists, and you can obviously share their expertise. So Paul Sheedy, as a special advisor for the Portugal Futures Fund, could you tell us why you have chosen to diversify across all of the key sectors that Paul Stannard has talked about?
Yeah, it's just, I guess it's kind of investing 101 really. So if where's the fund, this particular fund in the family is the Portugal Future Fund. And the goal here is to really allow it to be a final destination spot for euro 500,000 investment in your golden visa. So if somebody was to invest 500,000 directly into the fund, which is what it's set up to do, it covers the 5 years. But also importantly, it's our job to make sure that we diversify it so that we protect you from risk. So there are funds that do very specific things, either sector specific or they're almost project specific, and that's fine. And they have their purpose. And some investors will want to do that. They'll have particular interests in particular areas, and that's fine. And some people do slice off some of their investments. You can place parts of your investments into each fund. You just got to manage it very carefully to make sure that you don't affect your qualification for the visa. But our approach is that if you put a large part or all of your money into our fund, we'll take care of the risk by doing that diversification. So it's simply a risk mitigation strategy on behalf of the investors who want us to manage the risk within the fund. So we spread across various different sectors that Paul did a nice job outlining. And we also do a lot of co-investing as well. So we're not the sources of every great idea. And we have very good connections through our partners in the fund, and we tend to be able to get very early information on very good investment opportunities. And in that environment, we tend to co-invest along with other funds. So we might co-invest with a specialist fund in a tech project. We might co-invest, or we might do our own tech project, and that way we're mitigating the risk. So the investor can feel that we are taking that responsibility of reducing the risk of their investment over the 5-year golden visa period.
Thank you, Paul. Paul and Nuno, I mean, do you want to talk around any other elements with regards to the sort of importance of diversification?
Steve, if you allow me, I would just like to say that it's what Paul Sheedy was mentioning is fully aligned with what we see from our clients, because golden visa investors are typically people that are not that well versed about the Portuguese economy. So for them, investing into a fund that is investing in a single sector of the Portuguese economy could be deemed as more risky, because they don't know, as I was saying, that much about the Portuguese economy. So they don't know if that specific sector is the one that is outperforming the others, or if it is underperforming potentially. And they don't want to be, for example, liable to a potential contingency of a change in the law that applies to that specific sector. So what we have been watching, in fact, are clients willing to invest into funds that diversify the sectors in which they invest. And because, as I was saying, I think that clients feel that they don't want to put all the eggs into the same basket. And obviously they can do that by investing in more than one fund. So they are required for golden visa purposes, for example, to invest a minimum ticket of €500,000, and they can do that in more than one fund. But what we feel is that clients sometimes don't want to have the hustle of dealing with the KYC of 2 or 3 fund managers after already dealing with the one that the bank also requires for them to open a Portuguese bank account. So sometimes they feel that they are better off by investing into a single fund, but making sure that the fund invests in different sectors that dilutes and diversifies their risk.
Thank you for those insight and that thought, Nuno. Nuno, I'm going to stay with you. From a tax and legal perspective, what should potential investors consider from a cross-border tax perspective before obviously investing in Portugal?
Well, Steve, I think that it depends a bit on the goal of the investment, and also the level of ties that the investors wish to have with Portugal. And based on that, on those different situations, there are different aspects to be considered. I think that if the goal is the client to consider relocating to Portugal, or at least he is in a position where he can give away the tax residency in the country where he or she currently resides, I think that Portugal, as Paul already mentioned, we have recently launched the IFICI, which is also called the NHR 2.0, which is a tax regime that is attracting a lot of entrepreneurs, value creators, and highly skilled professionals. operating in many of these sectors that already mentioned here and that Paul has outlined. So looking at this IFICI, it means that individuals that become Portuguese tax residents, provided that they have not been tax residents in any of the previous 5 years, they can benefit from this IFICI for a period of 10 consecutive years, okay? And under this regime, they basically benefit from the application of a flat personal income tax rate of 20% on employment and self-employment income obtained in Portuguese territory, so from Portuguese source, and from activities that are deemed as eligible. And most of all, they get a full exemption on income which is obtained from abroad, provided that they don't derive from blacklisted jurisdictions. And this applies to capital gains, dividends, employment income, interest, royalties, rental income, everything that you get from non-Portuguese sort, except for pensions, will be fully exempt from tax in Portugal for 10 years. So one of the things that is important to mention is that so as I was saying, in order to benefit from this regime, the investor needs to become a Portuguese tax resident. And becoming a Portuguese tax resident depends on complying with one out of two alternative conditions, either or. Either spending more than 183 days, which is barely 6 months, in Portuguese territory in a given year, or if you spend less than that time, having a title over a Portuguese address, which is owned or rented, that you would be able to call your primary residence. So this links with what I was saying, because sometimes clients say, no, I'm not ready to become a Portuguese tax resident because I'm not ready to spend more than 6 months in Portugal. But the truth is, it's possible to become a Portuguese tax resident spending less than 6 months in Portugal by having a title over a Portuguese address that the client is willing to voluntarily call its primary residence. So this is relevant because, as I was saying, clients, even though they are not prepared to spend 6 months in Portugal, they may be prepared to spend less than 6 months in the country from where they are currently residing. So that allows them to give away the tax residency in that country and to become a Portuguese tax resident, even if they are traveling around the world for the entire year. So, as I was saying, for clients that wish to have a bigger tie with Portugal, I think that this IFICI regime is something clearly to be considered by selecting the investment to be made in Portugal. If, on the other hand, the investor is not willing, at least for now, to consider a more permanent move, we obviously still have the golden visa regime, which allows the investor and their families to have access to a Portuguese passport 5 years after the date of the golden visa application. As it was already mentioned here, the golden visa is now mostly limited to the investment in private equity funds. But the truth is that the funds, which operate in different sectors already mentioned here, tourism, healthcare, ESG, renewable energies, have been generating relevant returns to the investors and under a very efficient tax framework. In fact, not only the fund itself is fully exempt from tax, as the distribution of income to the investors is also tax-free if distributed to non-Portuguese tax residents, or liable to a flat 10% rate if distributed to resident individuals. Clearly, there are some considerations depending on what jurisdictions the investors come from. So when I mean that they are exempt from Portugal, it doesn't necessarily mean that they will be exempt when they reach the destination, meaning the place where the investor effectively resides from a tax perspective. And to give an example, for example, US investors are taxed based on their worldwide income by being US citizens. So it's always important to get cross-border tax advice to ensure that the investor is optimized from any investment that is made in Portugal. Finally, Steve, if we are talking about, for example, real estate investments or clients that are only making an investment because they want to have an investment being made in Portugal, but with no intention to effectively relocate to Portugal or to even any interest on the golden visa or on the Portuguese passport, I think that from my end, it's important for investors to seek legal assistance for a proper legal due diligence, and for also negotiating the terms of the purchase. And as well as they also should seek tax advice as to whether they should invest, for example, personally or potentially through a Portuguese or a non-Portuguese corporate structure.
Thank you, Nuno, for that detailed reply. I want to switch back to property. As Portugal is seeing obviously heavy investment in its connectivity, high-speed rail and new airports, and there are major investments in infrastructure, and the EU now sees Portugal outperforming the Eurozone and is heavily investing within the country. We've also seen, and Paul's mentioned this, that Ernst & Young say that investor confidence in Portugal is at an all-time high. However, when it comes to the property market, there's a major supply issue, and there is no MLS system in Portugal, which is another challenge in navigating and researching property. Joanna, what impact is all this having on the luxury property market? And are many of these sort of new touristic sort of developments that are popping up in various property hotspots in Portugal?
So it's a good question, because this improvement of connectivity, it's actually reassuring clients globally that Portugal will be more and more in the map as a relevant place, not only to visit, but also to work, because many of the digital nomads that we see and different source of visas, people really find important to be well connected. So with the new airport, but also with new routes being open directly from our US, but also for Europe, of course, every year, this is actually improving a lot the visibility and also the confidence to clients worldwide, and also from the luxury market, because if we see in the last year and a half, there was a nearly 25 increase on private jets in Portugal. So when we talk about the luxury market specifically, we see how more relevant it's becoming, and obviously the global connections and connectivity is highly relevant. In terms of the MLS system, indeed it's very, different from other countries. So we do have the properties a little bit spread in the market, not only online, but also in off-market channels that we know. And I would say it's really important when people want to invest here to actually have a local partner that has the expertise, but also the connections. Because if people are relying only in online advertisings, they will be missing a big part of the properties, because not everyone adverts in the same platforms. So also a lot of people are selling off market, and special properties or special investments, like good quality investments, start selling off market. Okay, so they have pre-launches for selected clients, and if you are not connected to a good local expert that can really open up all these routes, you will be missing part of the cake. So that's where we try to help clients, whether they want to invest in the medium up market or luxury market, to have access to these properties early stage, even before they are advertised online. And when we talk about the luxury market, we actually just collaborate with an article about selling off market properties, because there's more and more ultra luxury properties selling off market, and you might not miss all the units, but you will miss most of the very attractive units that will sell first. So for sure, that's something important, and to plan while you are actually seeking investments here, or just a holiday home or main residence. So these are the main things. In terms of the tourism, we are clearly on the map. Paul really went through the highlights, but the tourism in Portugal is booming. The hospitality investment and investors in the hospitality hotel segment, it's huge. The demand is really, really high. And there are really nice brands coming up, like branded residence as well. Six Senses is coming to Comporta. You have other entities that are investing in this setup and the luxury hospitality business. So for sure, it's something that is really booming, and whether for investors or for users, there is an opportunity to explore for sure.
Thank you, Joanna. A question on property for Paul Stannard. Would you agree that areas like Lisbon, Cascais, Comporta, Silver Coast, and Algarve are going to continue to be a seller's market?
If you go back 20 years ago, Portugal was, building, quite large numbers of new properties. We've had a number of changes of government. Last year, Joanna might correct me, but I believe it was between 25 and 30,000 new dwellings were built in Portugal, which, if you think about the demand, is nowhere near enough. And with the wealth, and there were good sort of indications of what would happen with the the housing issue for the wider public, but I think that's going to take a few years to play out. And with so much talent, so much demand and investment coming in, I just can't see, unless something happens globally that none of us can control, the market in Portugal is going to slow down. We had a client recently come to Cascais who thought, it must be overplayed, this sort of, send me some properties and have a look. And the agent involved said, well, I'm not going to send you properties because they'll be gone by the time you get to visit them. And they came on a visit. They had 5 properties to look at on one day. The first 3 they went to were withdrawn before they visited them because they were sold. Now, I'm not saying that's the same in every location, but there are some markets, and people say, just send me a selection of properties. Just send me a selection of properties. It's not how it's going to work. And as Joanna said about there being no MLS system in Portugal, I think there's close to 30% of vendors will not list on these platforms because it's not in a very good regulated way. So they trust great agents and partners to manage their property assets in a more holistic way. And new people coming to the country might find this alien. We don't have that in the UK. We don't have this problem. They don't have that problem in the US. So you do have to have the right partners, and the market is, I think, going to stay strong. There's too much infrastructure, things like the World Cup, the talent, what's going on in the world, and Portugal being a stable place comparatively than traditional places that would be seen as stable. I think is going to keep fueling that, and it started from a much lower point. There are places like Cascais and the Golden Triangle where prices are very comparable with some of those famous places around the world, but there are still opportunities to be had. But if you wait, it will mean that you will end up paying more later because it's unlikely to see a correction, I think, in the short term.
Thank you, Paul. Paul Sheedy and Nuno, what should investors be aware of in terms of sort of due diligence, and should they sort of manage risk in terms of real estate?
I mean, look, we're one fund. There are lots of funds. Portugal Pathways has an index of the funds in Portugal, so that's a good place to start when looking at it. And as a fund, we would prefer that you have talked to Portugal Pathways and talk to your lawyers before you come to us. because that way you're focused on what you're trying to do and you know what you want from us. And if we fit what you're looking for and what your risk preferences are, then we want to talk to you and we want to invest your money for you. So, but obviously the standard things are, look at us, don't take our word for us, look at what we've done in the past, look at how much money we've got under management, look if our management has changed recently, look all the standard due diligence stuff that you have, that, you know, past performance is no predictor of future performance, but it's sometimes not a bad place to start, particularly if things are stable in people or what people are doing, and then you can look at where we're investing, etc. So we're really relaxed about you doing full due diligence, because we feel that we'd stand up to anybody in that environment. So we encourage that. Look at the index that you have, dig a bit deeper. And one other thing, if there are Americans on the call, I'm sure there are, is to make sure that whatever fund you go to, make sure that they have the full compliance with American taxation legislation, and that they're used to doing it, not that they're about to do it, that they're used to doing it like we are. We're used to doing the annual reports in line with the standards that are required for your making your returns in America. So I think that's a very important piece if you are affected by as part of the American taxation system. Other than that, just the due diligence is what it is, your appetite for risk, and then your appetite for managing the risk on your own by maybe going to more than one fund, or your appetite for letting one fund to diversify that risk within their portfolio. I think that's basically the heading.
Thank you, Paul.
Steve, could I come in behind that? I noticed there's a few people in the chat saying, well, I'm European, I don't need a golden visa, and I haven't got $500,000 to invest, but, you know, I like Portugal, and, you know, I've come on this meeting to see where I can invest. Now, Portugal Pathways has this platform called Portugal Investment Owners Club. You know, we get to see opportunities, and through a collective, our community, you know, investors can piggyback off the back of that. So there are opportunities to make smaller investments. Some of these funds, there's no such thing as a golden visa investment fund. There are alternate investment funds. Some will allow you to invest €5,000 in them. You just won't be getting a golden visa with it. So they're alternate investment funds that are approved by the CMVM, which is the regulators in Portugal, very similar to the SEC in the US, or similar in the UK or whatever. So they're fully regulated, you know, with lots of reporting and checks, which I know Nuno will have had a lot of experience in some of those regulations. So you don't have to invest that amount. But there are lots of opportunities, whether it's in property, some of the sectors we've talked about, and we'd be very happy to arrange a discovery call to, you know, try and find out, you know, what best suits, you know, your needs. So please reach out to us.
Thank you, Paul. Thank you. To touch on one more thing before we get on to the Q&A, we're tracking on time, so but it said if we do go over a little bit and you have to leave right on the hour, as I said, the webinar is being recorded and we'll get that replay out to you within the next sort of 24 hours. But again, Paul alluded to it earlier, but Portugal is also set to co-host the 2030 World Cup, and is already home to Europe's biggest tech event, the Web Summit, and the Global IFA Conference, which has over 2,500 of the major tax and wealth management groups coming to Lisbon. I would like all the panelists' thought on this sort of positive media and interest, and how that's likely to play out, not only attracting investors, but also talent. Paul, can we sort of get you to sort of start this off and then get the others to come in behind you?
Which Paul?
Sorry, Paul Stannard. They said Paul at the beginning, sorry.
Yeah, sorry. Yeah, I mean, you know, America's got the World Cup, but will it have the same impact as, you know, football nations? Like, I mean, I'm sure Nuno, as a Portuguese football fan, will be able to tell you how mad it will be, just what will happen this weekend if between two Lisbon-based teams, let alone bringing the World Cup to the country. It'll have a huge impact. These things do, because they raise people's knowledge and understanding. People tend to visit the countries 2 or 3 years in the lead up and 2 or 3 years afterwards. I know London in the 2012 Olympics, if you walk around Stratford where all the Olympic, it's unbelievable what that did for inward investment in that part of London. And it's still going on in 2025. New airports planned for Lisbon, new rail infrastructure to add to the growing positive rail infrastructure that's there. The European Union being very keen on supporting infrastructure now, because Portugal is contributing rather than, in a bailout situation. And I think the media noise and, entrepreneurs and talent will keep raising that media awareness. And I think that's got to have a major positive impact on the Portuguese economy, because it's not Portugal shouting, it's everyone else shouting about it, which is even better,
Absolutely. Nuno, as Paul alluded to, being a Portuguese football fan, I suppose the question I have for you is, will Ronaldo be there?
I think that if he hasn't scored 1,000 goals by then, for sure he will be there. I think he will only leave or retire when he reaches the milestone of the 1,000 goals. But I fully agree with Paul. I think that even the pandemics brought a lot of digital nomads to Portugal, and Portugal became a kind of a hub for tech people and for tech companies as well. So nowadays, we have a lot of clients, like corporate clients, willing to set subsidiaries or branches in Portugal to take advantage from the fact that Portugal is packed with international people that are operating in this kind of tech sector. So I think that obviously we are the tax and the golden visa regimes, or the visa regimes, help to allow those people to establish in Portugal. But I think that the companies are also not only Portuguese companies like startups, but also foreign companies that understand the potential of Portugal and they want to be part of it, and to take advantage of the fact that Portugal, they don't need to convince people to move to Portugal, because some of the people that they would hire are already living here. So nowadays we've seen, so it's a bit the opposite. It's the companies bringing the talent, but in this case, the talent is attracting the companies to establish to Portugal. So I think Portugal is clearly an exciting place to be. I think that obviously the Web Summit had a massive contribution. The World Cup will obviously give awareness to Portugal, but to be honest, contrary to what used to happen 15 years ago or 10 years ago, I think people are very aware of Portugal and its advantages that basically provides people that wish to invest or even live in Portugal.
And when you see people like Ronaldo making investment after investment in its own country, Figo, and now you've got international figures in sport, in industry, in innovation, coming to Portugal and investing in the country. And that gets in the media. I was involved with something to do with nanotechnology. Portugal has a nanotechnology institute in Braga in the north to do with food production. And Katy Perry invested in one of these technologies. She told Oprah told Gates. The media blew it all up. They went to raise 40 million, but because of it, they raised 250 million. That's what happens. People follow the money, and the people are following the country. The money's following the ideas, and Portugal's in a sweet spot at the moment. It is.
Joanna, is there anything you're coming behind what Nuno and Paul have said?
Just taking the micro. Yes, so indeed, I think it's a very promising destination. Honestly, we see the interest continues increasing. I would say in terms of the property sector, it's one of the most well-proven wealth builders over time, and really it gives a lot of stability because and long-term value, because it's not like investing in crypto or in other more volatile industries. You can actually live there, rent it, resell it, so it's very like versatile, and we see that as a big factor. And also the fact that we have limited land available, because it's not like Dubai, Singapore markets where they build on heights. Here, fortune or unfortunate, we don't build in very big heights, so that's a problem in some areas that we could take advantage of that and increase the number of units to the market. But currently the city hall is very restricted, so we don't see a massive inventory coming to the market anymore. And this scarcity, it will help continue growing the real estate market. And also a lot of buyers want this part of the history to be in a cultural side, to not only own a property, but we see them owning part of the history of the place, to own part of the heritage, and to be involved in the culture, and to pass that into their like a legacy, into their families, into their children. And a lot of people we see are buying properties that maybe they will not use, but maybe for our kids or when we retire. And with this said, I think Portugal is one of the last luxury destinations that you can entry at the moment, at still reasonable prices when you compare to other countries. Obviously, we have spots with very, very high prices, but because they are super desirable. But there are still a lot of alternatives, and the country is small, so you can have very good connectivity and very promising appreciation and yields. So yeah, I mean, for sure, I would keep it in the map. I invest myself as well, so it's something that I still believe. I don't sell only, but I believe on the market, and if you partner especially with local experts that knows the in and outs of the market, how it works, have the right partners and connectivity with developers and freelancers and everyone, you still can get very good opportunities. So this would be like, I would wait no longer to advise someone to invest here.
Yeah, I dealt with somebody recently who bought 4 properties off plan, and they funded their golden visa in an alternate investment fund in 2 years, while the properties were being built, and flipped them and paid for their golden visa. And now they've got a bet, an investment going forward. Now, I'm not saying that that's going to happen again, but it just shows you.
No, but we still see
that diversification,
Sometimes clients ask us if they missed the train already, but definitely not, because in some specific cities there's a lot of development already and they are more consolidated, and for some reasons people prefer to buy there, but for some other reasons it's enlarging the areas that are attractive. So there's a lot of opportunities coming over that are still very close to the main cities with a very desirable lifestyle, and that can actually appreciate at a very, very good rates and 2 digits. So I would say it's still very attractive. People didn't miss the game. We are still buying and advising investors here to make good appreciation in different cities and in very good quality developments. So for sure, I totally agree. It's a thriving opportunity.
Thank you, Rory. I said I'm quite conscious of the time. We just nudged over the hour, and I want to get to some of these questions that in the chat. And again, if we don't get to all of the questions, which probably quite clearly we won't, because there are a number in there, our team will go in behind and reach out to you individually and answer those questions. And obviously, those of you who've requested a meeting, we will obviously organise that as well. The first question that I want to address comes from Michael. And Michael says, When it comes to choosing which alternative investment fund or funds we should consider for our family's golden visa residency by investment, how can you help us create a short list that covers all of the due diligence and gives us diversification and knowledge of their track record? So, Paul Stannard, do you want to take that one for me, please?
Yeah, I mean, I was involved in various sort of deep tech over the last 12 years, and we had to create indexes for nanotechnology. I was also involved in an alternate investment fund out of Luxembourg. And it was clear when we came to Portugal, there was no index, a golden visa index that indexed all of these funds, from the fees to their track record to their the return on investment projections, all of the metrics that you need to look at. So, I would recommend you have a call with one of our team and actually find the right mix for you. We can bring in wealth managers. You can bring in your own teams to validate all that. I would recommend doing that. And then we can, sit with lawyers like Nuno and talk it through further. And ultimately then introduce you to a number of those funds in terms of a short list, whether that's for Golden Visa or whether it's, through our Portugal Investment Owners Club, a smaller level. But, we've got people coming that are making, 10,000 investments up to, guys that are family offices with, serious wealth to invest in portfolios. But, the principle is the same. And we're very happy to take people through that.
Thank you, Paul. The next question is from Aisha. And she's saying she's interested in the IFICI NHR 2.0 tax regime, as well as investing in the tech and startup space. She's a data engineer from Canada, and she's asking, would she qualify for the IFICI? Nuno, do you want to sort of take that one for me, please?
Well, thank you, Steve. And so Aisha, first of all, Aisha operates in a sector which is eligible for the IFICI. The thing is, so she would need to become a Portuguese tax resident, as I mentioned. So that's the first thing that you need to become when you wish, because the IFICI is a status or a special status linked to people that become Portuguese tax residents. And the sector where she works in, or by being a data engineer and working in the tech and startup space, she would be eligible. The only condition is that she would need to work for a Portuguese company. So what we have been doing in situations similar to these is for a Portuguese company to be potentially created by the client. The client would be appointed as director of that Portuguese company. And through that Portuguese company, this kind of activity would be developed. The salary that Aisha would get from this Portuguese company would be liable to a flat tax rate of 20% in Portugal. But all the income that she would get from abroad would be fully exempt from tax in Portugal throughout the 10 years. So I'm more than happy to assist and to go into more detail. But the question, the way it is posed, I would say that all the ingredients are there that would allow us to consider an IFICI application.
Okay, thank you, Nuno. A couple more questions before we sort of wrap up and just sort of summarize today's event. This one is from Lisa. And she says, does investing in property have any tax implications, as she sees how in Spain people are now penalized from a foreign investor perspective? I mean, Joanna and maybe Nuno behind can answer that one.
I think Nuno is the right one to.
Nuno, yeah, okay.
We are not aware of any, but
no,
I think
there is
the tax star. So.
No, but it's true. But Portugal has no, like in Spain, there's no wealth tax. So we have in Portugal, just for investors to be aware, when the purchase happens, upon the purchase, there is a real estate transfer tax due, which is a one-shot tax. Then on an annual basis, there is a very residual annual tax, which is charged by the municipality where the property is located, but it's a very residual percentage. We're talking about a maximum rate of 0.45%, which is due on a value which is way under the market value of the property itself. So it's not a relevant amount to be considered, and there's only taxes if and when the client sells with a capital gain. So we don't have ownership taxes in Portugal or wealth tax in Portugal. And there's another thing that Portugal has, which is very interesting, which is the fact that Portugal has no inheritance tax nor gifts tax. So properties that were acquired by the parents, for example, could be gifted or inherited by their kids with no additional taxation being due. So I think there's not any concern about the situation that happens in Spain, and this is not something that we expect to happen, even if we have elections and parties changing from the left wing, or the governing party changing from the left wing or the center left to the center right. This situation was never triggered. So I think that we are safe to say that Portugal is not considering to have any relevant wealth tax in respect of owning properties in Portugal.
Lovely. Thank you for clarity.
Steve, and we're also getting a lot of Brits at the moment, wealthy Brits, obviously because inheritance tax is going up and they're bringing in pensions. So there's a wave of affluent and wealthy Brits, as well as value creators coming from there because of the inheritance tax and no inheritance tax thing. Once you've been outside of the UK for a period of time, you then fall outside of that. And obviously, no gift tax and no inheritance tax is also a major driver for a lot of Brits at the moment. Not wanting to give the UK Treasury 60% or more of their family's nest egg. Another reason to invest in Portugal.
Absolutely. I'm going to wrap it up. So we didn't get to all of the questions. As I said, Tim will reach out and contact you all individually. But before we go, I'd just really like to go around the room and ask each of the panelists for a sort of key takeaway from obviously today's webinar that the audience can take with them. So Paul Sheedy, I'm going to start with you.
Thank you. Well, thanks everybody for joining us today. I think my takeaway is that there's some fantastic sectors for investment in Portugal. There's plenty of headroom, we believe, in where those investments can go. We strongly advise that you take your advice to make sure that you make investments that are suitable to you. We would love people to start with people like Portugal Pathways, find out, because there's more things than just investing in what they want to do. Work with someone like Nuno to work out what their personal position is. Talk to Joanne about where they want to live and how they want to be, where they want to be in Portugal. And having done all that, if you end up at our door, we'd be delighted to welcome you into our fund if we are the fund for you and we suit your investment needs. And that's why we like to go through the other processes first. So when you get to us, we're not trying to work out whether we're right for you. We're just trying to work out how to get you into what we're doing. Thank you.
Thank you, Paul. Nuno?
Look, I think Paul Sheedy said it all, but I would just add that Portugal is in fact an exciting country with a lot of opportunities, and all the sectors that we mentioned, and specifically the fund industry, is very efficient from a tax perspective. So the returns that you are able to get are, at least from a tax perspective, very efficient from a tax standpoint. So I think that obviously, as Paul was saying, you should seek advice, professional advice, financial advice, tax advice, legal advice. But if you feel that the investment that you're going to make is one that suits your needs and your goals, I think that you are in the right country to make that investment.
Thank you, Nuno. Joanna, your takeaway?
So, I mean, I think being the last one, there's a lot of things that were said already, but I think it's, other than the golden visa or some programs, there is really interest worldwide on Portugal, not only on the funds, but all these routes that can be interesting. Obviously, real estate, as I said, is a very safe, wealth grown industry by default. So I would just advise people to, I mean, we work mainly with international clients, and a lot of people are, we call it doers, so they believe they can seek all the information online. But we really advise people to speak with local experts. In terms of real estate, we always like to spend a lot of time in the beginning to understand what is more suitable for each person. Because a lot of people come with ideas, but when they actually start diving with us, they see a number of different alternatives that can be even more interesting, and we can always help on making their process more smooth and efficient, connecting with banks or anything else that even the Portugal Pathways team can do. But I think it's very important to work with someone that really understands the market for long term and the dynamics, and works with developers, with hospitality industry, so we know where the opportunities are before even the market is aware. So it's really just this. And the time is now.
Absolutely. Thank you, Joe. And last word, Paul Stamard.
Basically, what I would say is a final takeaway, with what's going on in the world and what's going on in Portugal, it is now, really. This is where it's happening, and waiting. You might still get on the curve. You just might not enjoy all of it. And I think that's what we're seeing. People are not talking about it; they're doing it. That's what we've seen in the last 3 or 4 months. They're not planning it; they're acting on it.
Absolutely. Thank you, Paul, and thank you to our panelists today, and thank you to the audience who remained with us. And we were a little bit over the hour, but I trust that you found it informative and interesting. As I said, obviously, we'll be sending out a replay so you can digest some of those slides at your leisure. Our next webinar is on the 12th of May, as you can see on the screen. And it is all about investing in Portugal's luxury property market. So again, the link is on our website, which is www.portugalpathways.io/events. I know that the team have shared that previously. If you've got any questions or would like to reach out to us, please reach out to myself at steve.philp@portugalpathways.io, and I will endeavour to place you with the right person or set up a discovery call to discuss your needs and your personal situations and your desire to relocate to Portugal. So yeah, a big thank you to our panelists and for our audience for joining us today. Until next time, goodbye.